Hi guys, welcome back to the Finance Workout. Today we are going to be working out inflation, interest rates, and how the two can affect you. So let's get straight into it. Inflation. What is inflation? Inflation is the general increase in prices, and this can include things such as health costs, transport, food, anything really. But then on top of that, the better measure of inflation is what you call CPIH. So if we said just the general cost of prices is going to be measured by CPI, which is your consumer price index. On top of that, when you add the H to it, that is what you call the owner-occupiers housing costs. And these are all the costs that are related to owning your own house. And on top of that, also things like council tax. So if you look at this graph from the Office of National Statistics, you can see exactly which of the categories within the CPIH has influenced the most on the increase of inflation in recent times. And that is clearly housing. So we'll get into that in a second. But also you've got a substantial increase, I believe, in recreation and culture as well. And I think that just reflects the situation that has been going on around us for the last year and the last few months especially. So why has the housing costs been one of the most highest increases in recent times? This is because if you try to have a look back at 2020, what happened? Most of us had to stay at home, right? So some people were lucky enough to still have a job. Others had furlough, which is still income. So a lot of people were able to build an amount of savings that they'd never had before, but they were sitting on this money. So what the government wanted to do was to promote, incentivize people to purchase properties. And they did so by releasing all these different schemes. So you had the stamp duty holiday, for example, which was, people that bought properties under £500 were basically exempt from paying this tax. You had other ones like in more recent times that have come along, such as the 95% loan to value mortgages, etc., etc. This has incentivized people to go out and buy properties. Along with this, you also have interest rates. Now, what are interest rates? Interest rates is basically the cost of you borrowing money and also what you're paid if you are saving money. And also bear in mind that this, the banks make profit of this. So obviously what you pay is going to be higher than what you're paid. But looking at how that has impacted in this situation is that it has also made it cheaper to borrow money, right? So not only have you got the incentive schemes making it cheaper for you, but also you've got the interest rates making it even more cheaper for you. The problem is when the number of goods in the market are still the same. In this case, looking at properties, the number of properties haven't changed. There hasn't been a mass construction of new properties popping out in a year. It's just been the same amount. So if you take a step back and imagine, for example, there are two houses, right? And there are 10 people that want to buy those two houses. That's just going to create a bidding war, and it's what you would then call a seller's market, because the sellers are like, well, if you don't buy it, I know the next 9 people are going to want to come and buy it, and out of those 10 people, whoever has the more is willing to pay more for that property is the person that's going to get it. So this is what is driving prices to increase. Now, if you look traditionally, the inflation rate and interest rate have had a certain correlation in when they've been going up and down over time. So, a lot of people are wondering, are the interest rates going to start increasing as well, in order to start reducing that incentive that people had to go out and get more borrowings or mortgages or properties. And also, I believe this month the stamp duty holiday, for example, will be coming to an end, at least gradually. So I think it's by October or September when it will finally come to a hard stop. So yeah, this is how basically inflation and interest rates work, and how they will possibly affect you. So yeah, let me know your thoughts and your experiences. And just finally, how I was quite amazed when I looked at this graph and saw that interest rates not that long ago in the 90s were as high as 15%. Currently some people are able to get a mortgage at 2%. Can you imagine for a second if you have bought a property at a 2% interest rate on your mortgage, and then all of a sudden that changes to something like a 5%, 10%? Are you able to cover those costs? And I believe these are some of the things that some banks do. They, I think it's referred to as stress testing, to see if you are able to cover these kind of costs should changes happen, because interests, mortgages are up between 2 to 5 years where you can get a fixed rate, but after that things can change. You have to remortgage. So yeah, it's just a little bit of food for thought, really. And of course, another important thing about inflation is that it decreases the value of your money. If we stick to the example of the property market, and it costing £100,000 for a house, and that's the amount of money you had before, with this bidding war, prices say now the average of the houses around you become £150,000. So your £100,000 no longer can afford you to buy a house, and this is basically what happens with your money if you keep it in a bank account that's not generating any interest rates, or with the current amount of interest rates being 1%, the return on your savings is going to be very, very low. And that's why a lot of people are turning to the stock market and investing in ETFs and funds, so that they aim to get at least a 10% increase on a return on their investments, before tax, obviously. So yeah, let me know your thoughts and your experiences, and if you have any wild predictions of what's going to happen, I'd love to hear from you. Make sure you are looking at all these things and making the best possible decision for your money, for you and your money. Okay, have a lovely day.